think, the big trend has been the rise in the US capital to Europe in the last year, and I think that I don't quote numbers, but roughly 20 billion has come in this year, which is 4 times the amount of Asian capital coming into the market. So I think that in terms of quantum, the US is by far the most important, but most of that money is coming into funds. It's not coming directly into real estate, and therefore you see the big Asian brands as the key deals, and they seem to grab the headlines. But the US capital coming into Europe is probably more important in terms of sheer numbers. But they're doing different things. I think the US capital, US investors can invest in core returns in the US, and so in terms of your own money, and when you compete for stock in the US, core investors going for core returns, the money that comes from the US tend to coming into value add, and therefore it's coming that way. The Asian investors are diversifying and are looking for long-term stable income. So you've got different pressures from east and west. I think we agree with you that the Chinese issue is interesting, but what we see at the moment is the sort of tier 1 insurance groups are going to continue to invest, and they are still extremely, I wouldn't say aggressive, but they've got a weight of capital to allocate, which is going to keep them busy for some time. I think interestingly, the tier 2 sort of insurers that are going to come through and follow that sort of first wave of capital that's come from the Ginkgos and the Ping Angs and China Life and these guys, I think that those are probably more under pressure at the moment in terms of capital to allocate, but in terms of the long term, they could well be where that growth comes from, because that sort of, the amount of money invested in real estate in global terms is actually very small in China, and therefore, we see that increasing. Perhaps the other groups, Taiwan has been a very big, but they've done some very big deals between, Fubon and China and Cathay, so you've only seen, the first 2 perhaps of a number of investors and institutions that will come out of Taiwan. We're beginning to see the Japanese going into the States, and that will mean you'll see more Japanese capital coming into Europe in time. And so generally, I think, we don't see any slackening of global capital coming into Europe in the short term. I think that certainly that trend is set to continue. What they're going to buy is going to be the interesting thing, because I think that central London is just very competitive. People are talking about pricing, but in terms of whether that is value or not. But in terms of weight of capital, we've been involved in a number of deals recently where you've seen capital from all across the globe competing for the same assets. And so I think you're going to see the strategy of a lot of these groups is quite similar in terms of they're very focused, very disciplined on key CBDs. And that sort of, the sort of thought that I sort of started with was that sort of aversion to real risk is something that I think will, just perpetuate during the year ahead.